All right, good morning, everyone. Let's kick it off. All right. Last night in the States, we traded mostly sideways for the whole session. It was kind of a bit of a non-event. The S&P and the Dow both outperformed the Nasdaq. You can see the Nasdaq couldn't quite get off the ground, but S&P and Dow still closing up about 0.5% on the session, and more than enough to get us to all-time closing highs in the S&P. You know, I was saying it 2 or 3% lower than this. How spectacular the snapback in the S&P was, and even more spectacular now. It goes without saying. I mean, we've rallied about 11%, about 11% off the bottom, if I'm not mistaken, which is just spectacular. And it's going to be. I mean, I don't know if the market's caught short here, or if if guys are just starting to play the momentum on the long side now. But I think it's this rally is definitely getting a little bit long in the tooth. But I think that a lot of the guys have been skeptical for a while now. So just be careful trying to play that. We did have a little bit of a turnaround in the physical commodity space yesterday. We bottomed out around 76 in the oil price. We're talking about light sweet. That's all the way up at 78.80 at the moment. We also traded down to about 295 on copper. We traded back up to about 300 as of the close yesterday. And even in gold, I think we saw a bit of not a bottom as of yet, but we did bounce off of the lows from in the 30s up to the mid 40s. So definitely a little bit of a reversal of sorts in the commodities at the end of the day yesterday. You saw that a rebound in a lot of the mining stocks at the end of the day. At the end of the London session after we closed, we saw a sharp reversal to the upside, basically, as we, not too long after we wound down. So we also had some ADP employment numbers yesterday, came in better than expected, just kind of staying on the exact same theme of really good data out of the States. If you look at Asia overnight, most markets were down. Everything outside of the Kospi, the Nikkei finally coming off a touch off of the highs, and that's simply just because the yen made a slight bounce off of the recent lows. But the rest of the market's all under pressure a little bit, for different reasons. Shanghai, the power consumption estimates that have been used so far this year are lower than what was expected. Continued to see weak numbers there. Just the same sort of theme. Strong U.S., just really weak China. I saw numbers out of Macau yesterday for October. The VIP numbers were down over 30% year on year, which is absolutely just incredible. And then the mass market numbers were also down over 8%. So that's a real shocker as well. And I think that just goes without saying that China is starting to really come under pressure, and it can get a hell of a lot worse. I don't even think the real problems have begun there yet. Other than that, not a whole lot to really drive things in Asia. If we look at charts of interest today, another chart here from Charlie Bilello showing the S&P 500 utilities. The strongest, but yet the most defensive sector. It's actually interesting because the utilities had been really under pressure at one point, kind of going into August, and just totally reversed from there. Back up to really be the outperforming sector. It's quite spectacular considering all the changes that are coming right now in power supply and things like that out of the solar sector in the States. All right. A lot of earnings out today. We've got RDF with headline earnings per share came out dead in line. Revenue looking much better. Divvy looking pretty much in line. MediClinic as well, looking in line on headline earnings per share. Maybe a slight beat in revenues. Maybe a slight miss in Divvy per share. Full year expectations up 18.1%. So. And then Foschini as well. We've got numbers that are coming out there a little bit later today. That one's going to be interesting. Maybe he'd jot some of those numbers down and can compare them quickly when the numbers come out. It's supposed to be around 2 o'clock. All right, and then we've got Walt Disney when the States opens a little bit later. All right, we've got German factory orders out at the open this morning. I think that's all the German numbers have been very important, so pay attention to those when they come out. We've got industrial production out the UK as well as manufacturing production. Then we've got the BOE bank rate as well as the ECB main refinancing rate, all happening at 2 and 2:45. Then later in the States, we've got jobless claims and Bloomberg consumer comfort. All right, let's get into the maps. All right, first thing I'll have a look at this morning is a couple of the minors, and we're going to focus more in London because the chart's just a little bit cleaner here. You can see here there's a lot of wicks coming right into this 13 level. This is in Anglos. In fact, if we shorten this up a little bit, it's looking a little bit head and shoulderish on Anglos. Like I said, we did bounce into the close quite hard yesterday on the minors. You know, I don't know if that's anything that's sustainable as soon as the physicals started to turn a little bit yesterday afternoon. We've got this level, I think, is very important. I know that we did have a little close there, but I'm going to put the level for the time being at 13. If 13 drops, I think there's a significantly lower target. I think we can go below $12 in Anglos. And, you know, I know that this thing's already had a big sell-off, and guys are kind of trying to pick bottoms on it. But like I said, the story out of China, which is really the driver here, I think is here to stay. I don't think it's going to get better anytime soon. So I think that's something to pay attention to. The next one's Billiton, which also is looking shaky. In fact, we spent the last 2 days, the better part of the last 2 days, underneath that sort of bottom end level, which is at about 16.13, I think, if I'm not mistaken. Yeah, call it 16.13. We did close above that yesterday, spiked into the close, closed above that, and right now really looking like if we get back below that level, you know, we've been kind of struggling to get below 16 and hold below it. You can see we wicked below it a couple times, but it very quickly gets back above 16. So I would say just a hold below 16 for more than, call it 20 minutes or so, would give us confirmation maybe for this thing also to fall a quick pound in London. All right, look at BGA here. We're going to actually look at this on a 30-minute chart, and it's been consolidating over the last couple days, kind of making a little bit of what looks like a double top over the last couple sessions in BGA. Either way, we definitely showed some real consolidation between those two sort of levels, and we really dropped what was our main support level at about 70.30, dropping there, closing pretty close to the lows yesterday. I wouldn't be surprised if this thing did come back into support maybe down here from where we really kind of broke out, maybe closer to 160, 150, 162. Next one we'll look at is Imperial, and Imperial has been bumping its head now for several days as well right at exactly 190. There's been definitely been a big seller there at 190. You can see we're making a bit of an ascending triangle formation into this 190 level, and that's I think where we've got to kind of focus on at the moment. If we get through 190, then I think we could make a quick move up close to $200 in Imperial. All right, the last three I want to go over, they're all iron ore stocks. They all look really similar on the charts. They're all right at support. If you look at Kumba, starting out with Kumba's right at support. It's not exactly classic, but it's also looking a little bit head and shoulderish. It's just a little bit of a slant support line there. But definitely right at support, looking vulnerable. If we look at ARI is also, I wouldn't say this is necessarily a head and shoulder, but it's definitely right at support somewhere. Down here, you can see closing right on the level. If we shorten it up just a touch, you can see how important I think that level is going to be. If that level drops, we've got another significant move to the downside coming. And Assor as well. Assor is also right on support, really struggling the last few days, hasn't been able to get off the ground. It has made a lot of holds here, and that's the one thing of all these stocks. They've managed to make a lot of holds here over the last few sessions around these levels, and if we don't break down soon, then I think that they're in danger of maybe even reversing higher. So just let's play it closely. That could have a big move coming here in some of these iron ore stocks over the next week or two. All right, and that's it for today, guys. Thanks a lot.